Welcome back to Cashflow Lab. Today, we're embarking on a deep dive into something pretty revolutionary happening quietly in global finance.
That's right. We're looking at China's big strategy.
Yeah, their plan to relink gold directly to the yuan and, what that actually means for the US dollar's future.
It's a huge undertaking.
Absolutely. If you shared your sources with us, we've got a stack of analysis here, and it paints this picture of, well, a parallel financial system being built, like, right now.
It really does. And the premise is pretty straightforward, actually.
Yeah.
China is trying to fundamentally change how global money works.
Moving away from the dollar.
Exactly. Specifically, getting the world less reliant on the U.S. dollar as the main reserve asset.
And we're not just talking talk here, right? We're looking at the actual financial plumbing, the engineering needed to pull this off.
For sure.
Our sources dig into everything. The Shanghai Gold Exchange, which is massive now, these new BRICS alliances, and even these super obscure changes to international banking rules. Basel III.
Ah, yes. Basel III. Crucial piece. The analysis makes it clear this isn't just one thing. It's comprehensive.
Right.
You've got the physical side buying up tons of gold. Then there's the infrastructure building out this gold corridor, they call it.
Okay.
But the really smart part, I think, is how they're using the existing rule book, the global financial system's own rules, to achieve their geopolitical goals without needing a green light from the West or, say, the IMF.
Exactly. So our mission today, unpack how gold is shifting. It's going from being this passive thing sitting in vaults.
Right, just mass it.
To becoming the actual foundation of a new global financial structure, one designed to compete directly with the dollar.
And fundamentally, this whole strategy boils down to one word.
Trust.
And, how we even define a reserve asset anymore. What's fascinating, really, is just how methodically all these pieces are fitting together.
Physical gold, obscure banking regulations.
Yeah, physical bullion, global banking rules, it's all being assembled into this cohesive, challenging new system.
Okay, let's unpack that trust issue first. Why is the world even looking for an alternative to the dollar? I mean, historically, the dollar's been king, right?
Absolute undisputed. It's had what economists call exorbitant privilege for, decades.
And that privilege came from?
Trust, partly, but also necessity. For so long, U.S. treasuries were seen as the safest place on earth to park your money.
The ultimate piggy bank.
Pretty much. Historically, maybe 70% of all global reserves were held in U.S. dollars and T-bonds. Every country needed dollars for trade, for finance.
Gave the U.S. huge leverage.
Immense leverage. But our sources, they point to a specific moment, actually quite recently, that really shook things up, created this crisis of confidence.
When was that turning point?
It was sharp, 2022, after Russia invaded Ukraine.
Ah, right.
The United States, they froze about $300 billion of Russia's foreign reserves. A lot of that held in dollars, euros.
And that action, whatever the politics behind it, it sent a message, didn't it?
A huge message.
Yeah.
Systemically, to every single central bank out there.
What is the message?
It showed the power, right? The ability to just sort of turn off major nation savings with a click of a button.
Wow.
The fear that sparked globally was, you could feel it. If dollar assets can just be seized, locked up like that, are they really your reserves? Are they secure?
So countries started asking, okay, they did that to Russia, a nuclear power.
Exactly. What happens to us, maybe a smaller nation, if we disagree with U.S. policy down the road?
That's a scary thought for a central banker.
That's the calculation they made. And it wasn't just theoretical fear. You see it in the data. An immediate change in behavior.
How so?
Central banks, particularly in emerging markets, they just dramatically accelerated lowering their exposure to U.S. assets, selling treasuries.
Selling U.S. treasuries, the safest asset.
Yeah, large-scale public selling. And that money had to go somewhere.
Where did it go?
It looked for safety the U.S. couldn't touch.
Yeah.
Gold. Gold buying went through the roof.
Yeah.
Unprecedented levels.
So the net result?
The dollar share of global reserves, it's been falling, reversing decades of, consolidation. The trust in paper assets, especially ones controlled by a single, increasingly geopolitical power, it's definitely eroding.
Okay, so this loss of trust created an opening, and China, they didn't wait around.
No, they seized the momentum. China and its allies, they've become the biggest buyers of gold globally over the last few years, by far.
And it's not just buying gold, is it? It's like a two-pronged attack.
It's a systematic dual-action strategy, exactly. On one side, yes, aggressively buying and hoarding physical gold, building that tangible foundation.
Okay.
And on the other side, selling off big chunks of their U.S. Treasury holdings.
Which hurts the dollar's status.
Directly damages its reserve status, yeah. And global liquidity, too.
Now, what strikes me is how public they're being about this gold buying. They're not hiding it.
That's a really critical point. Strategically, it's fascinating. China absolutely has the financial tools to hide this buying. They could use intermediaries, shadow banks, keep it totally opaque.
But they don't.
They choose not to. They operate on a scale that's visible, reported transparently to the IMF even.
So it's signaling, like, look what we're doing.
It's deliberate strategic signaling, yes. Telegraphing, you could call it.
Who are they signaling to?
The rest of the world, definitely. But especially their BRICS partners. The message is clear. Look, we have the confidence, the money, the physical assets to move away from treasuries. You can join us.
They're leading by example, encouraging others to diversify away from the dollar.
Exactly. And if you look at the data, the charts, the sources show this massive spike in their buying right when President Trump started the tariff threats.
So partly a political reaction, too.
Absolutely. A counter move to economic pressure. Now, the official numbers from the People's Bank of China, the PBOC, they report around, what, 2,300 tons?
Yeah, something like that.
But basically every major analyst, Bloomberg, JP Morgan, World Gold Council, they all agree the real number is much, much higher.
How much higher are we talking?
Well, when you factor in gold held by state-owned banks, maybe military holdings, sovereign wealth funds, stuff not on the PBOC's public books,
Yeah.
the estimates jump significantly.
Yeah.
Closer to 3,500, maybe even 5,000 tons, effectively under state control. That level of systematic hoarding, it's a powerful statement about where they see future financial power residing.
And it's not just about having the gold, right? They're building the infrastructure to actually use it.
That's the crucial next step.
Yeah.
You can't build a rival system on secret piles of gold. You need the plumbing.
The infrastructure.
Right. So the Shanghai Gold Exchange, the SGE, already the world's biggest physical gold market. They're expanding vault capacity like crazy new one in Hong Kong recently.
And this gold corridor.
That's the network. Building a verified chain of vaults across key BRICS countries, connecting it all up.
And the goal of this corridor is basically to give the yuan some hard backing, something the dollar lost in 71.
It's about trust and redeemability, exactly.
Yeah.
The idea is countries holding yuan, maybe from trade, can swap those yuan for physical gold through this network.
Giving the yuan a tangible backstop within that BRICS sphere.
Precisely. Gold can't be frozen like reserves were, can't be printed into oblivion, can't default like treasuries technically could. It offers a different kind of security.
Okay, this is where it gets maybe a bit technical, but super important. We shift from the physical gold to the financial plumbing, the rules.
Yes, the Basel Accords. All that gold doesn't mean much in the modern banking system unless the rules recognize its value properly.
So how did the old rules treat gold?
Badly. For decades, gold was stuck as a Tier 3 asset under the old Basel framework.
Tier 3, what does that mean practically?
It was punitive, really. Let's say a bank held $1 billion worth of gold. As Tier 3, it could only count half of that $500 million towards its mandatory capital reserves.
A 50% penalty, essentially.
Exactly. It basically discouraged banks from holding gold versus cash or government bonds, made it less attractive on the balance sheet.
So gold was just like heavy, expensive inventory.
Pretty much.
Yeah.
Inert from a regulatory capital perspective. Then came Basel III, the upgrade. Largely took effect around July 2025. This was a huge, quiet win for gold.
What changed specifically?
Gold got promoted, upgraded from Tier 3 to Tier 1.
Tier 1. And that means?
It means banks can now recognize 100% of its value on their balance sheets. It counts just like cash or U.S. Treasuries for meeting those capital requirements.
Okay, so instantly more valuable for banks to hold.
Definitely increased its desirability.
Right.
Big time. But there's always a but.
Uh-oh. Even as Tier 1, it still wasn't quite useful enough.
You hit the nail on the head. Tier 1 is necessary, but it's not sufficient for what China likely wants. Banks still couldn't really use the gold actively.
Yeah.
Couldn't lend against it effectively, couldn't borrow using it as a prime collateral, couldn't use it in the vital repo market.
Ah, the repo market. Explain why that's so critical.
Repo, repurchase agreements, that's the absolute lifeblood of the global financial system. It's where banks do super short-term borrowing and lending, usually overnight, keeps everything liquid.
How does it work?
If a bank needs cash fast, say $100 million, they repo it out. They post top quality collateral to borrow the cash for maybe 24 hours. It keeps the gears turning.
And if gold can't be used as that top quality collateral?
Then it's still locked out of the core lending system.
Yeah.
It can't underpin liquidity in the same way treasuries do.
Which brings us to the next ultimate goal,
Which is
pushing gold to the next level of recognition, HQLA.
high-quality liquid asset.
Exactly. HQLA is the top tier, the gold standard, if you will, for collateral. These assets are deemed so safe, so stable, so liquid, they're the only things accepted in that critical repo market for interbank lending.
They're like the universal IOU currency for big finance.
That's a good way to put it. And right now, what are the main HQLA assets?
U.S. Treasuries, mostly, high-quality government bonds from allies.
Predominantly U.S. Treasuries, yes. And that is the structural anchor keeping the U.S. dollar essential for almost every major global financial operation, especially big stuff, like funding infrastructure.
Like building a port or a power plant. Yeah. If a country needs billions for a project like that, the collateral underpinning the loan, keeping the system stable, it's almost always going to be dollar-based assets, U.S. Treasuries.
Okay, I see it now. If China can get the world to treat gold as HQLA.
The entire dollar-centric collateral system gets bypassed, fundamentally.
Wow.
If gold joins that exclusive HQLA list, it's no longer just stored value. It becomes a functional financial tool. You can borrow with it, lend against it, fund massive projects.
Without touching the dollar system at all.
At all. It creates an independent, physical alternative foundation for global finance. Connecting this back, achieving HQLA status for gold, that's the key to bypassing the dollar's chokehold on collateral.
Okay, so this push for HQLA status, it makes perfect sense when you link it back to the physical stuff, that gold corridor infrastructure they're building.
Exactly. They realized just telling BRICS nations, hey, use the yuan, wasn't going to cut it.
Why not?
Two big problems remained, the same ones that plague any currency trying to compete without the U.S. system's backing, trust and volatility.
How did the trust issue play out?
Well, you saw it at the BRICS summits. China pitched the yuan, offered gold convertibility, but countries like India, Brazil, South Africa, they pushed back.
Referencing the Russia situation?
Absolutely. The message was basically, okay, maybe we'll use your currency, but hold our gold as collateral in China after what happened with Russia's reserves. No way. Centralized custody was a non-starter.
Okay, so problem one, trust in custody. China needed a fix, and the gold corridor was the answer. The sources called it an analog blockchain.
Yeah, it's a brilliant description, a low-tech solution to a high-tech trust problem. It's this network of gold vaults, spread out geographically, but verified by all the participating countries.
Like Fred Flintstone's blockchain, they said.
Yeah, the Fred Flintstone chain of blockchain. It uses physical distribution, verifiable location, instead of digital code to build that trust.
So how does it work across different countries? How do they trust the records?
Every vault in the network, Shanghai, Hong Kong, maybe Mumbai, Johannesburg, soon, they're all linked to the Shanghai Gold Exchange system, the SGE.
Okay.
The SGE acts like the central ledger, tracks every bar, purity, serial number, who owns it. It's all verified, but crucially, the actual physical gold stays spread out.
So South Africa could put its gold in a vault in, say, Dubai,
Right.
and still use it as collateral through the SGE system without worrying China might just grab it.
That's the core idea. It centralizes the record-keeping for efficiency, but decentralizes the physical risk. Makes it much harder for any one country, including China itself, to weaponize the system. Solves the trust problem.
Okay, problem one solved. What about problem two? Volatility. Gold prices swing wildly day to day. How can that work as stable collateral for huge long-term loans?
Yeah, that's a killer issue. If gold drops 5% overnight, your multi-billion-dollar loan is suddenly underwater. You need a massive margin call, daily spot prices. Too volatile, too easily manipulated.
So China's solution?
Elegant, really. Price stabilization using a moving average.
Instead of today's price, use an average over time.
Exactly. Maybe average the price over the last, say, 100 or 200 trading days. It smooths out the bumps, makes the collateral value much more predictable.
Reduces the price risk for everyone involved.
Drastically. And that predictability is absolutely essential if gold is ever going to work as reliable collateral for serious debt financing.
Okay, now I see the whole picture connecting. The regulatory push, Basel HQLA, the tech fix, moving average, the trust fix, gold corridor. It all leads to how they can actually use the system geopolitically. The Africa example.
Yes, this is where it gets operational.
Yeah.
And where they can bypass the West and the IMF completely. Think about many African nations.
Resource rich, often infrastructure poor.
Exactly. Producing maybe a quarter, even a third of the world's gold. But they need roads, power plants, ports desperately.
Under the old system, they'd go to the IMF Western banks.
Typically, yes. And those loans often come with strings attached, political conditions.
But under China's new system.
The path is different, direct. These countries can deposit their physical gold into a verified SGE vault in the corridor.
Okay.
Then China, using institutions like the New Development Bank, the BRICS Bank, can loan them yuan.
Using the gold as collateral.
Using that verified gold as hard collateral, priced at the stabilized moving average, the yuan then gets used immediately to build the needed infrastructure, maybe by Chinese companies.
So Africa gets infrastructure, China gets influence, access to resources.
And the whole deal happened without needing U.S. dollars, without U.S. treasuries, without the IMF's blessing. The gold within that BRICS system is essentially acting like an HQLA asset already.
Regardless of what Western regulators officially decide.
Precisely. They've created the reality they wanted, turning gold from passive metal into active collateral funding global development and cementing their influence.
Okay, so the big question then, what about the U.S.? Are they just watching this happen? The sources suggest, no, they're aware and they're making moves.
Yeah, the evidence seems to be in the physical movement of U.S. gold itself. Earlier this year, the U.S. started doing something pretty unusual.
Which was?
Repatriating large amounts of its gold, bringing it back home from overseas vaults, mainly London, Bank of England, moving it onto U.S. soil.
The official reasons given were kind of vague, weren't they? Tariffs, audits.
The official story didn't quite add up, felt a bit thin. But if you look at it through the lens of China's gold corridor strategy,
It looks different.
looks strategic.
Yeah.
The potential real reason. The U.S. gets it. They understand that if the global game shifts towards a system where collateral needs to physically exist and maybe even move, then physical control is power.
And the U.S. has the biggest official stash, right? 8,000 tons.
Roughly, yeah. World's largest official reserve. To compete effectively in a world where physical backing matters again, they need that gold here, physically secure.
So bringing it home isn't just housekeeping, it's preparation.
Preparation for a potential multi-collateral future. For decades, leaving gold in London was fine, based on trust. But if the rules change, if that gold might be needed to back, say, a digital dollar or stablecoin, something sources speculate about, then physical control becomes paramount.
Interesting. Okay, what about the price of gold itself? If this BRICS strategy works, if gold becomes widely accepted collateral, what happens?
The potential demand is just enormous. Think about it. Right now, big institutions, central banks, pension funds, they hold maybe 20% of their reserves in gold and similar hard assets on average.
Okay.
But new guidelines, like from Bank of America and others, are suggesting, given all the geopolitical risk, that allocation should probably be closer to 30%.
That 10% difference across the entire global financial system, that's a lot of money.
It's huge.
Yeah.
That incremental 10% shift translates into potentially $2 trillion of new sustained demand flowing into the gold market.
Wow, $2 trillion.
And gold, you can't just print more of it.
Yeah.
So if $2 trillion in new capital chases a relatively fixed supply.
The price has to go up a lot, violently, perhaps. Some sources are predicting the gold price could double in the next 5 years as this whole recollateralization trend really takes hold.
Which leads us to this idea of a competition.
Yeah.
A competition for the future of money itself. Two different systems emerging.
Yeah, it looks like a clear split forming. You've got side A, the BRICS bloc, China leading, building a system backed by something physical, ancient, tangible gold. It prioritizes state control, hard collateral verification, maybe slower.
And side B, the U.S. and the West.
They have to play to their strengths, right?
Yeah.
The U.S. is the world's biggest exporter of, well, paper money, but also technology.
Right.
So if China's system is collateralized by gold, the U.S. counter might leverage tech, stablecoins, maybe a digital dollar, tokenized assets. It's becoming gold versus digital.
The source material had that great comparison, gold versus Bitcoin, as the two main challengers to the dollar.
Yeah, it's about the source of trust. Gold offers trust through time. Millennia old, physical, slow, needs vaults. Bitcoin offers trust through energy and math. Digital, fast, transparent, borderless.
Different philosophies. Totally. China seems to want control via physical custody. The U.S. could compete by emphasizing technological openness and transparency.
So maybe it's not one winner takes all, more like a multi-monetary world.
That seems to be the emerging consensus, yeah. For the first time in a long time, maybe since Bretton Woods collapsed, governments might actually have to compete based on offering a better idea of what money is.
Interesting.
You can easily see a coexistence. A gold-backed system, maybe yuan-centric, led by BRICS, and alongside it, a digital or tokenized asset system, stablecoins, CBDCs, maybe even Bitcoin playing a role led by the U.S. and the West.
And this competition, this choice between systems, that's what could drive those massive price adjustments.
That's the theory. If countries, institutions, even individuals start having a real choice about the fundamental nature of the collateral they trust, then the assets representing those choices, gold on one side, maybe Bitcoin or digital assets on the other, they could see their values reprice very, very quickly, as the source put it, over the next 5–10 years.
A fundamental repricing. That's quite a thought. Okay, let's wrap this deep dive up. Quick recap for you, the listener. What ticked this all off? The dollar losing trust after the Russia sanctions in 2022.
Right. Then China's methodical plan. Buying up physical gold, pushing for banking rule changes like Basel III to get gold toward HQLA status.
And building the gold corridor, that clever decentralized network to solve the trust and volatility problems, letting developing nations finance projects outside the dollar system.
Exactly. And maybe a final thought, something provocative for you to chew on after this.
Go for it.
If money really does become something, countries and people can actively choose between, say, a physically backed, state-controlled system like gold yuan versus an open digital tech-backed system like maybe Bitcoin stablecoin dollar. How does that competition change how these big superpowers behave? Does it make them more accountable? Which path ends up being more resilient, more stable for the world in the long run?
Lots to think about there. Thanks for tuning in to Cashflow Lab. If you found this insight valuable, subscribe, share, and hit the bell icon to stay updated on global finance trends.